Very good evening to all of you. I am very pleased to be here in this gathering. And the subject matter is something which is very dear to me, rapid transforming of Indian mortgage market. I trust the key takeaways from our collective and collaborative approach on the forum like this should go a long way in shaping the contours of the real estate that has the capability to fire the giant wheel of this Indian economy. I'll keep the address short as we have the panel discussion or the fireside chat lined up also. Our resilient economy has upended the prospects for realty sector as one of its key growth driver. The real estate sector is poised for exciting times, riding the synchronized policy actions, regulatory reforms, easier terms of long-term financing from financial intermediaries, and formalization of economy gaining credence. With the latest narrative and the numbers to housing enablers given in the budget, there is a Goldilocks movement for the sector in the offing. Financing remains the most critical key to enable households owning the developing units in sync with their aspirations. The ability of the banking system to deepen and proliferate the markets by attracting buyers to avail long-term finance conveniently has seen India's real estate financing by formal players increasing manifold. As per RBI FSR, over the last 11 years, the share of residential housing loans in total advances of the banking system has increased to 14% from around 8% in March 2012. Apart from the direct lending, the banks have been spearheading the housing for all movement by tying up with the co-lending institutions, namely HFCs and NBFCs, who have the last mile connectivity. This is important since HFCs can often operate in select pockets where formal players are still not able to make inroads. Banks are also geared up towards raising loans in terms of long-term bonds to finance the affordable housing, making investors a part of our sustainability commitments. The government's focus on increasing spend on housing and infrastructure is expected to have a far-reaching multiplier effect on the economy. Increased investment in housing and infrastructure sector will have a positive domino effect by directly bringing growth to all the allied industries and increase the employment opportunities. Housing construction activities have stronger linkages with their upstream and their downstream components. This means that upstream suppliers along with the value chain tend to benefit more than the downstream sectors in case of housing. In contrast, the real estate services have stronger linkage with the downstream component than the industries found upstream. Additional livelihoods are generated from the activities of these two related sectors. For a geographically and culturally diversified country like ours, with a large population base and economy still transforming to formalization, there are multiple pain points in adopting any particular model in toto as we chase solutions to providing housing for all. The intent of the policymakers to accelerate the ease of living that envisage an ownership dwelling unit for each household through faster and adequate credit delivery, interest subsidy and tax incentives, and strengthening laws that deter certain elements from gaming the system while using digitization to enable better land ownership records would rather work a long way. The impact of real estate on multiple industries like cement, steel, furnishing and finishing is well known. Also, construction has a lion's share in creation generation of jobs across multiple places. Fortunately, with policymakers' genuine effort, the entire ecosystem is geared towards accomplishing this goal with efficiency, tying along multiple milestones and fulcrums. The cost of financing has considerably been brought down for the most deserving group through subsidized interest rates by GOI. Also, banks like us are very conscious of pegging the interest rates to optimally lower loans for home ownership. We also incentivize borrowers with good credit history with low rates or give concessions to women borrowers to encourage them to come up in the life and also contribute meaningfully for the society. GST has been instrumental in simplifying the tax structure and ensuring an efficient tax collection regime as indicated by the recent monthly data, thus plugging the loopholes and giving the policymakers a unified, holistic view. The next driver of growth should come from the non-conventional areas, Tier 3 and beyond, towns and centers, as also rural pockets. That has got the proximity to the urban agglomeration. And also, thanks to the improved connectivity, this will become a reality soon. As policies are framed to cull the friction points on land ownership through digital routes or better utilization of government land for affordable housing clusters, there are clear echoes of a great transition in the offing. So these are some of my thoughts I felt I must share with this larger group. Thank you very much for giving an opportunity. Thank you.
So we'll have a little freewheeling chat on the market. Ridhima actually took away whatever I wanted to say. I mean, Mr. Khara has seen the highest ever net profit posted by India's largest bank, which is about 20% of the industry, and the only bank which is among the top 50 banks in the world. And also, as she has said, the other part, NPA of the bad assets is less than 1%. So congratulations, Khara Sahab. But what she did not say is this, Mr. Khara is the second chairman in SBI's 200 plus year history who got beyond the first term. Arundhati was the first lady, got 1 year, and you got about 8 months, 9 months. Right? And because that's the particular age that you would reach in August, that's why. Otherwise, you could have been probably longer. So, welcome to this, Khara Sahab. We'll have a very freewheeling conversation. Incidentally, I was your customer, home loan customer. 2016, I took that loan. And I remember it took me at least 1 month to get that loan. But now, and that was the time when India's largest private bank was talking about within 48 hours, within 72 hours, within 5 days, given there. Your DMD is sitting here. He was with that bank, I think, at around that time. But now I understand SBI is as nimble-footed as some of the private sector peers. Your processing time has dramatically improved. Can you take us through? Because is there more processing units or what's happening internally SBI?
Thank you very much for the opportunity, Tamala. What you mentioned in terms of processing time, of course, we have also traversed a journey. Way back, we started housing loan in our portfolio in a meaningful manner from the year 2000. Before that, we used to do, but not as significantly. But after 2000, what we have done, we have actually gone through the journey. When we started, of course, our branches used to be the places where we used to sanction the loans. But for all purposes, from the year 2011 onwards, we have actually significantly improved our processes in terms of the centralization of the processing. Initially, we used to have about 150 odd centers from where we used to process the housing loan for almost about 20,000 plus branches. So today we have come to a situation where we have now got almost 400 centers spread across the country, and from where we are doing the housing loan sanctions. And also it's a centralization in terms of the sanctioning, disbursement, documentation, disbursement. So everything is now centralized across the country. And also when it comes to number of days, what you mentioned, today we have come to a stage where our average time taken for sanctioning of home loan is 8 days, and it is average time taken because average time has to keep in mind the kind of processes which are required to be done in terms of verifying the documents, title deeds, etc., and obtaining opinion reports on those title deeds. So all said and done, this is the kind of a number which we have achieved. Also, I would like to mention that almost about more than 50,000 odd applications are processed every month in these centers. So that is a kind of a volume which we handle. So actually the number is somewhere around 57,000 and odd, which we are processing on a monthly basis. So I think there's always an effort to improve. And when we started, we had some loan management system. We have significantly upgraded that loan management system now. And it actually helps us in reducing the processing time significantly. And we are quite cognizant of the fact that if at all we have to really build up this book, we have to be very mindful in terms of the time taken for delivery on ground. So that is something which we are working on.
I think precisely 391 centers, right? I was going through your
that's
annual report, 391. And you plan to add another 150 soon by this year.
Yeah, last year we added about 150 more centers.
And by the time you step down, how many more you would like to add?
Well, we are assessing the requirement. Depending upon the requirement, we are quite open to add many more centers. And it's actually now we have come to a stage where wherever possible, if at all digital documentation is possible, even that is also being facilitated. And I would say that in terms of maintaining files and because these are the long-term loans. They are normally 20 years lifetime loan, and on an average, of course, we have seen that average duration of these loans in our book is also somewhere around 7 to 10 years, depending upon the areas. So, but yes, of course, this is one area which we have to be very clearly focused, because these are the title deeds which are kept with us, and we should be in a position to pass on the title deed as and when the loan is repaid. So these are some of the operational issues which we have to be very cognizant, and we are ensuring that we should be on the top of it always.
I should have initially said, I forgot, that SBI's home loan portfolio is, correct me if I'm wrong, a little over 7 trillion now,
Yeah, that's
and which is 20% of your overall assets, that is 35 trillion.
Yeah, you're right.
Right? 35 lakh crore is the overall assets, which is comprising retail assets and mid-corporate and agri loan, home loan, etc. And of that, 20% is home loan, which is 7 trillion plus.
That's it.
Right? And overall, probably the banking sectors, because overall home loan market is about 30 trillion. That's the number I
that's
see.
right. That's it.
As of
About 14% of the total loan book which is there of the banking system, it would be somewhere around that only.
Yeah. So, and banking sector contributes the maximum of it. And all. So, Mr. Khara, tell us this processing, beyond processing, and how much you give. These are all micro stories, but at the macro level, this construction, I mean, housing thing is something which can really create employment and give a big fillip to the economy. Right, like say roads and bridges, like the construction companies, because you have labor, you have cement, iron, and everything else for this housing company, for employment generation, for taking the country to, and banking, particularly State Bank of India of your size, you are a proxy for Indian economy and all. So how do we actually approach this? I mean, what are the ways? Like one way could be what happened in Singapore, the Lee Kuan Yew experiment, where the primarily how do we bring down the cost for financing for the, because by the Reserve Bank of India's norm, you are not allowed to give loans to the developers for buying land, right? That's a separate story. But in the retail segment, on the demand side, you can do whatever you want. But how should the country approach this? Because the subject is housing for all, and how do we add to the resilience of the Indian mortgage market. It's globally, it's a very loan to GDP ratio, loan to mortgage ratio in India is the lowest, 11%, right? This is the market, and this is the segment which can really play in a very, very, very positive role to our ambition of growing economy to 5 trillion, becoming third largest economy. So what other things need to be done?
Well, of course, I think the formalization of economy is something which has really helped this sector to grow. The kind of challenges which normally a financer face is essentially relating to the digitization of the title records. Many of the states have done it, but some have yet to do it. So that is something which is the first and the foremost. Then, of course, there is always an effort on the part of any lender to look at the EMI, NMI ratios so that the borrower should not be over leveraged. What we have seen is that in the formal sector, there is perhaps not much of challenges, but in the informal sector, there are challenges, and that is one of the reasons why perhaps the housing finance companies are in a position to take a call in terms of the imperfect documents or inadequacy of the title deed, or maybe availability of the very clear record in terms of the land and title deed. So I think that is one of the major challenge which we face. And of course, I would say the RERA has, of course, brought in a lot of discipline in this particular sector, and that has established the credibility of this sector in terms of its ability to really deal with this kind of a situation. So I think I would say that if at all this whole process in terms of the mortgage, etc., can be streamlined, it will go a long way. And what we have seen is invariably the imperfection of paperwork is something which is a cause why the banks are not in a position to come all the way, and there perhaps the NBFCs and HFCs step in and they take a calculated call in terms of lending to such sector. But yes, of course, when it comes to housing for all and the government initiative in terms of PMAY went a long way in terms of making it a reality for many. So I think this is something which works very well. The other model which of course we have seen is in Singapore, where almost about 80% of the land ownership is with the government, and they can decide in terms of where what should come up, and that gives a very clear visibility in terms of the title deeds. The second aspect is that they are using something comparable to our EPFO for extending loans. Of course, that is a funding channel. It is those loans are extended by entities like HDB, which is more as a sovereign fund-owned entity. So that is something which is working out there. So I think, of course, there are some lessons to learn from them, but of course, we will have to probably create a solution which is typical for the Indian situation.
As you rightly mentioned, that RERA has brought in a lot of transparency as far as the developers, the way their activities are concerned. But do you, see, of course, the budget already happened, that's an interim budget, we'll see the full-fledged budget post the elections, etc. But is there any scope for fiscal incentives, tax incentive, etc., to pump up the sector?
I think much of it will depend upon how the GOI will look at it at the time of the final budget. But yes, of course, I certainly feel that there could be a scope for giving some incentive so that homeowners are also encouraged. Because the other piece is that though HRA or the rent is deductible in terms of the tax, but as far as the home loan installments are interest on the home loan is concerned, that has probably, it can be revisited, though of course it is allowable as an incentive. But yes, of course, over the period of time when it was last looked into, maybe there could be a scope for revisiting this aspect.
Sir, can you give us some sense, like 7 trillion plus that your home loan portfolio, is it predominantly retail, or is there any segment which is also LAP there, or the developers?
We hardly have any LAP for individual and LAP for corporate, all put together would not be more than 2-3% in all. So it is all pure play mortgage loans or maybe housing loans. And for the retail sector.
Okay. Not the developer financing,
no,
right?
No.
Yeah. We will have panel discussions on that bit, but just a little bit, because as SBI chairman we don't get every day to talk. So tell us a little more about which is playing a very critical role in mortgage market also in terms of risk assessment and underwriting and all. But overall, being the country's largest bank, people say that now the elephant is dancing. Is it to the tune of AI and analytics? What's
Yeah, of course, we have started leveraging the database which we have. It was quite a static database for many, many years, but now we have created various algorithms, and we are running those algorithms on our database, which actually helps us in honing our risk management practices. Apart from that, it also helps us in terms of identifying the potential customers whom we should reach out for offering our various products and services. And on the top of it, it also helps us in offering the customer what they are looking for. So that is something which we have started doing. And happy to share that today, with the help of analytics only and through our YONO platform, we are underwriting more than 1 trillion worth of assets, which is quite, in fact, if we look at our total balance sheet, it is a very small number, but nevertheless, I would say that in about a year or two, we have been in a position to make it so powerful. And going forward, we are expecting, in fact, there is a growth of almost about 30% in a year in this particular loan book which we have created. And in terms of quality also, this loan book is much, much better than already much better quality which we have. So this is something which we are doing. Analytics is actually one of the major levers for us in terms of marketing, risk management, in terms of identifying the markets where we should go, and also for improving the customer experience.
So you are running a sort of digital bank at some level.
Yeah,
YONO is already there.
I would say that it's a beginning. We would like to scale it up. And the ambition is to take the YONO to the next level, where it will be a digital bank within the bank.
Khara Sahab, it's a sort of extension to the mortgage market, I would say. PM recently announced that about 1 crore solar rooftop.
Yes.
Right? 10 million solar rooftop. So can you tell us like how SBI or the entire banking system would approach this to help?
No, we actually look at it as an opportunity. We already had introduced various products for promoting adoption of solar, and rooftop solar is one such program which we were already running. And I believe that it can go a long way. When I looked into the broad contours of the scheme, I could observe that this is actually going to be a game changer, because every household will become the electricity producer by virtue of this, because they will consume part of the electricity generated through solar, and the remaining they will pump into the grid. So that to that extent it can go a long way in addressing the energy security needs of this economy. And my sense is that, say almost about, normally these assets are for about 20 years, and if at all, it takes care of the EMIs are not more than, say, 8 to 10 years of their electricity bill. They are actually having free electricity, and also at the same time they are generating income for themselves. This is going to be a big game changer. 1 crore solar rooftop, I'm sure. We have already seen the adoption of this in a big way in 2 states. One is in Gujarat, the other one is in Kerala, where this has been adopted. And what we have seen is that a very well integrated approach with the state government, various functionaries, and also the DISCOMs has actually made it happen. So I'm quite hopeful, and I perceive that it's a very promising scheme, and we as bankers would be very happy to look at it in whatever way we can contribute for making it a success.
Mr. Khara, coming back to the mortgage market, now if you see, as we discussed in the initial stage, that it's a 30 trillion odd market, you are 7 trillion plus. HDFC Bank, because by virtue of the merger of HDFC with the bank, is 7.5 trillion. So between you two is about half of the 50% of the market. And then the other banks put together probably 80% of the market. Rough, I'm just saying. It probably 78 to 81%. I don't have the current figure, but till July, at least till the first half of the last calendar year, that was the kind of scenario. And if we see that segment which banks catered to is very different from the segment of NBFCs, because the cost of fund is very different. No? Your cost of fund could be, you are probably the lowest cost of fund in the industry? Less than 5%?
More or less, yeah.
4.5% or
Yeah,
4.75%?
That's right.
Huh?
That's right.
So conjuice, sir. Don't give any money to the depositors.
No, it's not like that. It's not like that. I must also mention that, the well-being of the economy depends upon the low interest rate structure. And at the same time, we are not compromising the depositors'
No,
interest.
we'll come to that, sir, later.
Yeah.
But I'm just saying that by virtue of that, I mean, investors will love it, and so are the home buyers, because you can give home loan at a much lower rate. But your target audience is different, the salaried class, etc., etc. And NBFCs need to have those target. I mean, those are, I would say, on the risk parameter will be slightly risky, and they would charge the higher rates because they don't have the advantage of CASA, what the savings bank and the current accounts which the banking system has. So, is this the architecture for Indian mortgage market? Will it continue, or do you think some kind of disruption, it can be approached in a different way?
No, I think, as I mentioned, that if at all there is the increasing credibility of the land records and also the certainty of the income streams, will certainly boost the confidence. And invariably nowadays we are also evaluating the credit scores of the borrowers, because that is something which captures the unstructured piece very well. So we are evaluating, not that we are only confining to the salaried class. We are looking at some threshold level when it comes to the credit scores. And if at all the borrower has got those credit scores, we are extending them the interest rate benefit also. And also we are very happy lending to such customers.
And the banks poaching each other, that trend is not anymore there, right?
I think that will remain a reality. We all have to accept.
Okay. Post Lehman crisis, I think SBI got into this teaser loan, where the first 2 years it will be a very low rate and then go up and all. So you keep on experimenting, innovating. Is there any kind of innovation we can expect from SBI in the mortgage market?
No, those are the early days when we started getting into the mortgage market. That was a point of time when it was felt that in 10 years' time, all these borrowers will have a higher income and their ability to repay will be much higher. So as against that, what we have observed is that nowadays, on and average, the average duration of such loan book is just about 8 years or so. So I think we are encouraging people to go for the second home loan. We are encouraging people to go for the upgradation of their homes. So we are extending credit facilities for all such kind of things also. So these are the add-ons which we keep on offering, and we keep on looking at what the customers are looking for and accordingly try to offer them the solutions.
Thank you. So it's a banker for every Indian. Sir, just out of mortgage, I'll have just 2 questions to you.
Sure,
we are
please.
almost coming to an end. I'll not take much of your time. Thank you for coming and joining. About this liquidity tightness that everybody is talking about. And NIM is coming under pressure. That's the net interest margin between what a bank earns on the deposits and what the bank spends, or the spends on the deposits and earns from the loan assets. So NIM is coming under pressure. CASA is going down. Credit to deposit ratio is going up. For many of the banks, it's 100% plus. Reserve Bank of India has been talking about it and all. So what's happening? Is this how far is it very critical? Is it something that you have never seen in your career? Some of the bankers says, no, we have not seen this kind of pressure on deposits. What's the way forward? The credit growth will come down?
Well, of course, I think this invariably we see around the time when there's a advanced tax payments are due. That's a point of time when invariably the liquidity gets squeezed from the system. That is one part of it, the story. Overall, there is a liquidity deficit in the system which is around 3 trillion or so. But we have seen that RBI is very closely monitoring that deficit and are ensuring that there is a VRR facility is made available so that the growth should not get impaired. So I think it's a fine balancing which even RBI is doing. So at the same time, as far as the fiscal is concerned, it is much within control. So I think as far as the rates are concerned, the GSEC, etc., that will continue to be quite soft. So I think this is the new paradigm which we are moving into. As we are moving into the developed market, the financial markets becomes more and more efficient. And that is what it will probably operate at very thin liquidity levels also.
So nothing to be worried about. The
I
banking
don't
system's
think so.
good run will continue
No, see
in
the
terms
point.
of quality of assets as well as the credit growth.
I think as far as quality of assets are concerned, all banks are quite cognizant, and they have put in place enough mechanisms on ground to have better underwriting and also to ensure that the quality is maintained in terms of the recovery efforts. So I think I don't perceive much of a challenge in terms of quality for the banking system.
And credit growth?
Credit growth, I am quite hopeful that I normally believe that it is linked with the macro, and macro is poised very well in terms of the growth opportunities. So with that, the credit growth should continue to do well.
Your deposit growth is good enough to support credit?
Yeah, very much. We have last quarter also we have grown. The gap between the two is just about 1%, but the fact remains that on the deposit side we are at about 47 trillion, on the loan side at about 36 trillion. So we are having a sufficient, there is no challenge, and on the top of it we still have excess liquidity in terms of SLR to the tune of about 3 trillion in the system. So we are very well placed in terms of...
And your credit deposit ratio, sir?
Credit deposit ratio as on December was 66%.
66%.
Yes.
Oh, there's
and
a lot of
also
scope then.
we have got a liquidity coverage ratio of more than 130%.
Oh,
so we are very well placed in terms of supporting the growth initiatives of the economy. So
66% credit deposit ratio, and you have plenty of excess SLR, government
yes,
money.
absolutely.
So no halt to the growth of State Bank of India.
No challenge for the growth.
Okay, sir. It's a great note to end, but before that, since you said that Reserve Bank of India, it was not actually, I did not think on those lines, but you said you brought in, don't blame me, RBI is doing a very fine job in terms of liquidity management. As we speak, the MPC meeting is on. MPC, those who are overseas, have come from overseas. MPC is the equivalent of FOMC in US and MPC in UK. So MPC meeting is on, and tomorrow we'll get to know what Reserve Bank of India's verdict on, or the MPC what it decides on with the rate, whether it's hike or change or whatever it is. So what is your take, sir? Very brief, whatever you can say.
I think MPC is very clearly focused in terms of ensuring that the inflation rate should be within 4%. So as of now, it is around little more than 5. So my expectation is that it should be a status quo as far as the policy pronouncements are concerned tomorrow.
No change in rate.
Change.
And no change in stance also?
I expect likewise.
Okay. So that's from Mr. Khara, who leads State Bank of India, country's largest lender, 20% of the industry, and one of the top 50 banks in the world. So Khara Sahab, thank you for your time, your talk on mortgage and beyond.
Thank you. Thank you very much.
Thank you so much, Mr. Khara and Mr. Bandyopadhyay. At this juncture, can I request Mr. Mahesh Misra, MD and CEO at IMGC, to present Mr. Khara with a token of appreciation. Ladies and gentlemen, can we give a huge round of applause for this fireside chat, from liquidity tightness to credit deposit ratio, to the fact that SBI is a digital bank, and to the ambition that every home is going to be an electricity generator. I think this was a very vivid and versatile conversation that we witnessed. Thank you, Mr. Tamal Bandyopadhyay and Mr. Khara, for this very engaging and reflective conversation.